Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for March 15th, 2010. This is Patrick Ceresna. As always, we start off with the S&P 500 using that Spider Exchange Trade Fund symbol SPY. Last week we were saying that the market can continue to work its way higher, proceeding for testing right up into this 115 to 116 zone. We got exactly that this week. So how does everything play out from here? Well, we're on the alert for a potential reversal pattern coming in here. Now, that reversal pattern, if it does come in, does not necessarily mean that it will be in a very aggressive sell-off, but simply that at some stage here, markets don't proceed in one straight line and must consolidate. At this stage, we want to look at a multiple set of scenarios. Number one, if we go through a 1 or 2 week consolidation and we hold above the 110 to 112 area, I don't have it marked off here, but about a 50% retracement on the downside. If at that stage we wouldn't rule out the possibility that the market may then turn around from something like that and proceed higher. But also in the same regards, we still can consider this to be at risk of a double top, in which case there's also a chance that if the selling comes in aggressive this week or early next week, that the sell-off can intensify and bring it all the way back to the bottom end of that range for a retest into that 103 to 105 zone on the downside. So the theme for the early part of this week is to see whether or not the bears have any selling pressure that can intensify. Next year, I want to take a look at the ISE US Regional Banks Index, which is the symbol JLO, and we were suggesting that this one still had some upside room to go, and that a measured move on the upside would actually have the regional banks testing the $24 area, maybe a move even as high as 25. Very robust breakout happened last week, pushing it right in that zone. We believe that the upside is only marginal on regional banks until they go through a consolidation phase. So at this stage, this is a very good time to be taking profits on regional banks. And if in the same regards as the S&P, if we go through a week or two of consolidation, especially if the regional banks can hold above the 22.5 to 23 area on any pullbacks, that may turn out to be bullish and have some follow through later next month. But at this point, we see marginal upside from the short-term perspective. Next year, I want to take a look at the ISE Syndex, which is the symbol SIN. This is an index of all the casino, tobacco, and distiller companies. And we basically at this stage have some testing up along the previous highs and what's marked off as that 108 to 110 focal point on the upside. If the whole market goes through some sort of a consolidation again, this will be where we will see a short-term top on the Syndex. At this stage, I think there's only marginal upside. It would take some sort of a industry catalyst to have a legitimate break above this zone without the whole market first consolidating and then making a push higher. Next year, I want to take a look at the ISE Home Builders Index, which is the symbol RUF, and more or less they were able to break higher into a measured move up toward the $11 area, and we're seeing a little bit of selling pressure coming in here. There's going to be some housing numbers coming out this week that may be the catalyst for further strength or weakness. We'll find out in the next few days. Technically, the home builders continue to have relative strength to the broader markets. If this support line holds in this 1040 to 1060 area on any pullbacks, and then we get some housing numbers that are construed bullishly, we at that stage could see a finishing thrust that goes all the way as to highs 1125 to 1150 area. But nonetheless, similarly to our other outlooks, there are risks at these kind of levels for us to begin sell cycles. Next here, I want to take a look at the ISE Natural Gas Index, which is the symbol FUM. And as well, we've seen this rally working its way slightly higher. There's a short and measured move as well as a retest of the previous highs, all occurring at this 113 to 115 area. We believe that this will cap at least this leg of the rally. Again, similar like we were suggesting in the other ones, if we have anything that consolidates on the downside that doesn't have any intensification in the sell cycle, then we at that stage would be looking for maybe further upside. But at this stage, there's only marginal upside to stay with this trade. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is the symbol UKX, and more or less and induce a somewhat part to the weakness in the British pound. What we have basically seen was a very strong push in the FTSE index itself, and that has actually thrust to higher highs, but we were suggesting that even numerous measured moves only cap that to potential up into this 560 to 570 zone. This would be a very logical place for there to be some sort of a retracing move. Again, we don't want to imply that we have a bearish change of trend just yet, but simply identifying that there's a lot of overhead resistance that could stall the rally up in this area. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.